It's a great pleasure to know Scott. He's a friend of the Huntsman School. In fact, this space that we're in right now, the L. Tom Perry Pavilion, which Scott opens up to another third a little bit farther, named in honor of our great alumnus, Elder L. Tom Perry, was supported in part by Zions Bank. By way of introduction, Scott is known around the state as Utah's unelected governor. He's involved in everything. There isn't a good cause that Scott, in some way, hasn't been involved in. And he serves on so many different boards. Governor Herbert said there's rarely an event that is designed to help Utah businesses, families, or communities in which Scott is not involved. He says, my theory is that the guy has clones. Clones who happen to be every bit as friendly as he is. Scott's family heritage includes Ezra T. Benson, who was an early pioneer here in Cache Valley, and also Major Howard Egan, who was in charge of the Pony Express from Salt Lake to Reno. So his family goes back quite a ways. His father was a very eminent judge here in Salt Lake City, a federal judge, Judge Alden Anderson. Scott is married to Jessa Lee Barlow Anderson, and among his many, many honors and distinctions are that he and Jessa Lee were honored as with the Distinguished Service Award from Utah State University in 2007. So won't you join me in welcoming Scott Anderson to Utah State. We have a short video that might be a way to start us off. Scott, do you want to say anything about it?
I'd just say I'm thrilled to be here with you this morning, and I'm especially pleased to be in this room. L. Tom Perry not only was a good friend, but he was a board member of Zions Bank and helped direct the bank for a long period of time. And so we were honored to be able to participate to help honor him with the naming of this room. But I thought to begin with, I wanted to show you a short video. It tells the history of Zions Bank. And I think that will help set the stage for maybe some of the comments and questions today. The bank was over 140 years old, and we did this on the 140th anniversary. And so it's 140 years of Zions history in 140 seconds. So it's a short video, but I hope you enjoy it.
140 years of Zions Bank history in 140 seconds. It all started July 6, 1873. Governor Brigham Young of the Utah Territory considers organizing a savings bank in Salt Lake Valley called Zions Savings Bank and Trust Company. 4 days later, the bank was incorporated with a capital stock of $200,000. That's a lot of money. Maybe I should start a bank out in the middle of nowhere. October 3rd, 1873, the day the doors flew open, cashiers recorded deposits of almost $6,000 by 46 depositors. $6,000 back in those days was nothing to sneeze at. During the 1880s and 90s, financial assistance from the bank helped launch several industrial firms that would later become Kennecott Copper, Union Pacific, Utah Power, and Mountain Fuel. You can bet most major industries in Utah were served by Zions in their formative years. In 1916, a bigger bank was needed in Vernal, Utah. To save money on shipping materials, 80,000 masonry bricks from Salt Lake City were wrapped in paper and then thrown in the mailbox. They traveled more than 420 miles by parcel post, much cheaper than sending them by freight wagon. After this stunt, the U.S. Postal Service had to impose weight limits on daily shipments. Today, Zions Bank's Vernal office has the distinction of being the only bank in the country entirely shipped by mail. After the Great Depression, many banks across the nation closed involuntarily. In February of 1932, worried depositors withdrew $1.5 million in 2.5 days, prompting Bank President Heber J. Grant to place a sign in the window assuring that there was no safer bank in the state or the nation. By the end of the month, total deposits exceeded withdrawals. Without that sign, this video probably would have ended here. Luckily, it doesn't. On December 31st, 1957, Zions Savings Bank and Trust Company, Utah Savings and Trust Company, and First National Bank of Salt Lake City merged to form Zions First National Bank. Also, the apostrophe in Zions was dropped. I never really liked that apostrophe anyway. A few years later, on April 22, 1960, the Church of Jesus Christ of Latter-day Saints sold the majority of the control of the bank to Keystone Insurance and Investment Company. I guess that's what they call separation of church and bank. Skip ahead to a more recent time, June 1991. Zions Bank starts an annual tradition called the Paint-a-thon, where bankers drop the balance sheets and pick up paintbrushes to join together in sprucing up the homes of the elderly and disabled. This event always brings out my inner Vincent Van Gogh. In July of 1997, the Gem State learned what local decision-making really means when Zions Bank entered Idaho. Who doesn't like a good Idaho spud? Today, Zions Bank employs roughly 2,600 people in 128 locations throughout the communities of Utah and Idaho. They really haven't forgotten who keeps them in business. And that's 140 years of Zions Bank history in 140 seconds.
That's great. It's a great way to get us into the bank. And we want to talk about banking in Utah and economic development a little bit, Scott. But I noticed in that video, that paint-a-thon, you were there with your paintbrush. That started just shortly after you arrived at Zions Bank, isn't it?
Yeah, we've done it about 25 years, 26 years,
Yeah.
and you know, we paint about 50 homes a year, and we get almost 3,000 people out. So
Wow.
More than just the employees. They come with their families, and some of the employees are here, and we paint homes in communities all throughout our market, Utah and Idaho.
Well, I think that was said in June or July of 1991, and you arrived at the bank in, what, December of 1990?
1990.
And you came from Bank of America.
Right.
And you had been in San Francisco, and before that you were in Japan, and then before that you were in San Francisco with,
Right.
with Bank of America.
Right.
So if we're working back a little bit, my understanding is your master's degree is in economics and international affairs from Johns Hopkins. You have a bachelor's degree in philosophy and economics from Columbia. You did attend the University of Utah for 2 years, served an LDS mission to Tahiti.
Right.
And someplace along the line in there, you also spent a year at the University of Bologna
Right.
in Italy. So you picked up French, Italian, and Japanese along the way.
At one point. No longer.
Okay. I've mentioned something about your distinguished forebears and your honored father and mother. I didn't mention that yours was a bipartisan family. Your mother coming from a strong Democratic family, the Weilandmans, and her brother was a candidate for governor in the state of Utah. I remember when he ran, was it 1968 or?
Yeah, it was, and then he ran for Senate
Yeah.
against Wallace Bennett and lost both elections.
Yeah, well, we have something in common with that in our family. I had a father that ran and lost for governor, and I ran, as you know, for the Senate and lost badly. Well, Scott, take us a little bit through your developmental years, if you would, before we get into to banking and what you're doing now. What was it that interested you in economics to start out with?
Well, I was always intrigued with the sort of multiplier effect of money and how people can deposit money in banks, and then the banks can take the money and lend it out 7 times, and it just has a huge economic impact. And I went to school, as you mentioned, at the University of Bologna for a while, and when you're there, you realize how important trade and finance have been to the development of the world.
I think Bologna is the oldest university in Europe, isn't it?
It's the oldest university in the world, and they have a very good sense of history and the history of finance. And so they go back to where the merchant princes, actually started the banking system. And if you go back early enough, people would carry around their gold or whatever they were going to barter with. And then they realized that they didn't have to carry it around if someone would keep it for them and give them a slip of paper, which became checks that they'd write on. And so the banking really, that we know it today, came from those early Italian merchants. And it always intrigued me how money can grow and expand and built on the trust that when you need the money, you'll get it. But when you don't need it, it's out there being multiplied to help business grow.
Yeah. So the money multiplier is what really drew you into a study of economics. You also studied philosophy along the way and international relations. Tell us a little bit about your interest in those topics.
Well, I love to read, and I loved to read the books of some of the European philosophers. I like to see how they thought and how they sort of pieced together the history of humankind and how it developed. And so when I had the chance to go to Columbia University in New York, they had some of the best professors of philosophy in the world, and I was able to take courses from them, and I graduated with a degree in philosophy, as you said, but also in economics, because my parents said, you know, you can never earn a living as a professor of philosophy.
Good counsel. And the international relations, you've obviously lived all over the world. I think you were in Japan for 7 years or something like that. What is it about international affairs that are of interest to you?
Well, I think, you know, going back again to my experience in Italy, and you saw how much of the development of the world really has come from trade. You know, and if you go back to the time of Cleopatra, here Egypt was the wealthiest country in the world. She was probably the wealthiest person in the world. And then it
Cleopatra.
Moved. Cleopatra.
Yeah.
And then it moved. And I had a professor in the University of Bologna who was a communist. Bologna was the largest communist city in the free world. It was freely elected as a communist government. But his contention is that if you look at Columbus went, you know, he knew where he was going, and you know, it wasn't to prove that the world was round, it was to find the lost tribes of Israel, because he was, according to my professor, he had a Jewish background, and he thought if he could find them, then he could trade back and forth and have make an immense fortune. And so, you know, so much of the world is based on this trade. And as you see the world develop, it's become so flat and so interconnected that it just fascinated me. And so I
This was a Marxist professor who was telling you about trade.
Yeah.
And what else did you learn from this Marxist professor?
Well, yeah, it's interesting, you know, the trains ran on time in Bologna, though in Italy they were always late outside of Bologna.
Yeah, except when Mussolini was the dictator. You know, this is a rather snarky comment, so I hesitate to make it, but you did transfer from the University of Utah to Columbia. Had you stayed at the University of Utah, there were plenty of Marxist professors for you to learn from there.
Yeah, that's probably true. And I took some classes from them. One, Walter P. Reed, a great philosopher, professor at the U.
Scott, you come from a family of 6 boys and 1 girl. And your brothers are all very distinguished in their own professions. You have, I think, 3 who are doctors and 2 who are lawyers. Is that right? Including one named Doug, who is a doctor.
Yes.
Is he the guy who's staring out at me in that billboard as I come north on I-15, ear, nose, and throat?
Yeah, he is.
Yeah. Well, at least he's not an axe murderer.
Yeah.
That's good. So, Scott, your grandmother said that of you that she thought that you were probably the only non-professional in the family. You were far too entrepreneurial. Can you tell us a little bit about your relationship with your grandmother and why she might have said that?
Yeah, I had a fabulous grandmother, and we would spend the summers with her. She had a summer home up on Hebgen Lake, just outside of West Yellowstone. And
was this Hetty?
Pardon?
Was this Hetty? Your grandma?
Minnie.
Minnie. Yeah.
she believed in education. She never got beyond, and I don't think she actually graduated from high school, but she believed in education. She was just a hungry reader. Anyway, she told me that she was disappointed that I was her only grandson that wasn't a professional. I didn't have a doctor in front of my name or an attorney after my name, and that's true. And so,
Well, yeah, I hope to have the chance to meet Minnie someday, because I want to assure her that maybe we can arrange to have you get an honorary doctorate here at Utah State. So make a note of that.
that'd help.
Let's make a note of that. What do you think?
That'd help.
Our mission here at the Huntsman School of Business is to develop leaders of distinction in commerce and public affairs, and there is no one who exemplifies that more than you. So we're really honored to have you here with us today. Scott, you are so involved in community affairs. Help us understand why you devote so much of your time to community affairs.
Well, I passed out, and I will address this guiding principles for the bank, and this goes back to our founder, Brigham Young, and it was revised by Roy Simmons, who I consider the modern day founder of the bank, and by his son Harris, who's our chairman of Zions Bank Corporation. But there are a couple things in here that I want to emphasize. In the middle, it says, banking is a local business, and that to be successful, you have to have strong ties to the community and strong relationships with our client. And then at the top, it says, our goal is to create value for our clients, value for the communities, value for the employees, and obviously value for the shareholders who have invested their capital in our organization. And that to create this value and to help our clients, we need to be conservatively entrepreneur, and we need to do things that will help our clients grow and develop, whether there be a consumer, whether they be a business, and to provide economic opportunities for them that will allow growth. And so we are very much attuned to the community. We think it's part of the role of being a community banker. But on the other hand, it's sort of selfish that if everyone prospers, hopefully people will come back and do more business with us, and then we'll prosper. And then our customers' stories make our story possible, and we live in a better community. And so, going back to the very beginning, when Brigham Young founded the bank, he said that he wanted this bank to be the heart and soul of the community, and to be recognized as a significant contributor to the community. And I think from that founding to today, that really is in our DNA.
Yeah. We celebrate this year the 100th anniversary of the 100th birth of Leonard Arrington, who was a professor of economic history in our college, and before he became church historian, and wrote the great book, Great Basin Kingdom. And so that's a wonderful book about the development of Utah's economy, and of course Zions Bank was a very big part of that. And it's interesting, as you say, how important it is for money, how important the role of money is in economic development, and how tied it is to community affairs. And you used the magic word trust a little bit ago, that really you can't do your job without that strong trust bond between the bank and the community. And that's what you exemplify so well with your involvement in all these different
Well, I think that's what our employees do. Again, we have a couple of them out here. Our business is based on trust, and it goes back to the very beginning of banking, that I trust if I give my gold to you, that when I need it, I can get it back. And if I feel like I can't get it back, I'm not going to give it to you. And if I don't give it to you, then you can't spread it around.
That's really an amazing thing, isn't it? If you try to put yourself back into the time when those deposits first happened, we take it for granted now.
Yeah.
I bank with you. I never think about it twice. I always know that I can get my money from Zions Bank if I need it, no matter where I am in the world.
Yeah.
But you think about those original people involved in that transaction, you know, handing over the bullion. That had to take a lot.
Yeah, it is. It's just trust. And you may have noted in the video that during the Depression, there was a run on the bank.
Yeah.
And people were lined up. The first day they took out about $2 million. And you know, it was owned by the church, and the church knew that it would fail if they couldn't get more money. And so they posted a note on the door saying, you know, we have plenty of money. It's a safe bank. Come and we will, you know, we'll give you whatever you want. And then they sent Heber J. Grant back east to raise additional capital. And he raised $1 million. And when he came back, in a brilliant PR move, he had the cash stacked on the back of a wagon and rode it down Main Street to the front of the bank and then carried in the money. And so people saw the money come in. They saw this letter from the chairman of the bank, who happened to be the president of the LDS Church at the time, and the run stopped.
Yeah.
But again, it was that trust that you know, if we need the money, it will be there.
It'll be there, yeah. Now, going back to Bank of America a little bit and the Italian connection there, talk a little bit about the Bank of America. It was founded by Amedeo Giannini, an Italian immigrant who started the bank in San Francisco, originally as the Bank of Italy, and then renamed it some years later, Bank of America. Can you tell us a little bit about Bank of America?
And when
I think it's the country's largest bank now, or is it second largest?
It's about the third largest
Okay.
now. When I worked for them, it was the largest bank in the world. I was lucky that I became very close to Claire Giannini, who was AP's daughter, the only surviving child. But AP was really a genius, and a lot of how we look at banking today came from him. Before that time, banking was for the rich. If you didn't have a lot of money, you know, you weren't in the bank. And AP had, you know, came from humble beginnings. He was a fruit merchant. And then as he would sell, people then would come to him and say, can I borrow this or borrow that, almost like a money lender. And he decided for Italian immigrants like him, he would open up a bank. And so these were immigrants. And he then decided that he could lend to them and have them pay over time. So he developed installment lending. Before then, you'd get a loan and you'd pay it off. But you know, the working class couldn't do that. And so he invented installment lending. Then he invented the credit card, which was originally called Bank AmeriCard, and then it became Visa. And so he was a real genius in taking banking and giving it to the masses and giving it to small businesses. And he was unique in that when he died, his estate was about $500,000.
What year was that?
He died in 1947.
Okay.
And
That's not really that much for someone who created such a big bank, is it?
No, and it was the largest bank at the time. He changed the name to Bank of America during the war because Italy was on the side of the Germans. And when you look at the wealth of the Rockefellers who were in the Chase Bank and J.P. Morgan, who had built his bank, but AP decided that he was to give his money out. So most of his money he had given away before he died.
Very
so
interesting.
$500,000 estate, you know, is a good sum of money, but it wasn't.
In comparison to the great
The others,
titans of American industry and banking and finance, that's pretty modest.
Yeah.
And you say it's because of his orientation to philanthropy and giving and charitable. We're going to have for our commencement address this year, Adam Grant from Wharton, who's written a book called Give and Take. I don't know if you know that book.
I haven't.
But he talks about givers and takers, and he makes the point that giving is a little bit like money in the sense that it multiplies. Taking is just the reverse of that. And so it sounds like AP was a great exemplar of the importance of being a giver rather than taker.
And if you look at California, a lot of the great industries and iconic symbols of California were funded by AP. So the Golden Gate Bridge, it was built during the Depression. It was the largest suspension bridge at the time being built in the world. People said it couldn't be built. It was over the San Francisco Bay, which had a lot of wind and strong currents. And he said that he would fund it. So he financed and took on all of the bonds to finance that bridge. And he knew that if it failed, it'd be toast for him and his company. But it didn't fail. And so now you have this wonderful bridge. He funded the fledgling movie industry, which kept the movie industry in California, where most of it was migrating to New York, where the money was. Yeah. And so he financed, the agriculture in the San Joaquin Valley.
There's a great story about him financing just ordinary people after the great San Francisco earthquake. Can you tell us a little bit about that?
Yeah, after the earthquake, he came out, the buildings some of them were still on fire, and he came out with a wagon with gold on the back of the wagon, doing banking business there on the street when everyone else was closed.
And he was giving it out to just ordinary people, not just the rich people.
No.
And my understanding is he always used to say that that all those loans that he made, all those earthquake loans, all got paid back.
They did. They did.
Yeah.
But he was really a banker for the people. He, as I said, really developed consumer banking, and he changed it. And in his heyday, and this is an interesting connection back here to Logan. He not only had Bank of America, he had First Interstate Bank at that point. He had the Bank of Hawaii. He owned 30% of Citicorp in New York. He owned Transamerica, which was an insurance company. And Mariner Eccles, who was chairman of the Federal Reserve, hated him and said he couldn't have that. That was antitrust.
That was too much.
And so he had to divest of everything except for Bank of America.
Wow. If you took the value of all of those assets today, they would be considerably more than $500,000.
Yeah.
Scott, what is your personal objective with the bank? You've been now at the bank since 1990, so almost 30 years, and as president, roughly 20 years. What would you, you've done so much already. Is there anything more that you'd like to do? Do you still have an agenda?
Yeah, well, I think the agenda is the same. Banking's an interesting business, and with all of the fintech technology coming out, it's changing. And you people bank differently than my parents banked and that I bank. And the goal is to ensure that we are providing services and the way for people to bank as they want to bank, that we have that technology available, that we're providing good advice, and that we continue to help move the economy forward, and that we continue to create value. And that's what drives me, that opportunity to try and create value for consumers, for businesses, for communities.
Yeah. The bank that you run, Zions Bank in Utah and Idaho, has it's almost doubled in terms of the number of branches, and it's about 5 times as large as it was when you became affiliated with the bank in terms of assets. So you're over 16 billion in assets, something like that.
Yeah, I mean, if you take it all, including our investments, we're about 20 billion.
20 billion.
As Zion's First National Bank.
Yeah.
And the holding company's about 60 billion.
How do you account for this, for the growth and the success of Zions Bank over that period of time?
Well, again, I think it goes back to the basic philosophy and the great employees that we have that have this vision that they want to be out there as community bankers helping people to succeed.
Yeah. And let's turn now a little bit to consider the community that you serve. Yeah. And it's Utah and Idaho, but I'd like to focus in on Utah if we could. You're so deeply involved in economic development in Utah. You've chaired the governor's council on that. You've been deeply involved with the World Trade Council. One of the things you've been doing, which I personally and Kathy, my wife, have benefited from, is that you've been organizing these trade missions that the governor has gone on. You and Jessa Lee and Kathy and I were together on a wonderful trip to Israel about 4 years ago with the governor. An amazing trip, by the way. Thank you for organizing that. But you're so deeply involved in economic development. What are your thoughts about Utah, its current state of evolution, and its future prospects?
Well, I'm really bullish on our state. You know, I think there are a couple of issues that we have to watch out for, but I think, you know, we have a strong economy. We have a very diverse economy, which I think a lot of us living here don't realize the strength that gives us or how diverse our economy is. But I think what really makes our economy strong, and you know, this was said by the Wall Street Journal several years ago. It's just coming out in another article by Bloomberg, that Utah is the best place in the country for upward mobility. Mm-hmm. And there has been talk that the middle class is dead, that you can't rise up and improve your situation except in Utah. And I think that gives a tremendous enthusiasm and vigor to our economy. And if you look at the number of startups, the number of small businesses, you know, the idea that Utah is the Silicon Slopes and that we have more VC funding here than in Colorado or any place other than San Francisco and San Jose, that's just remarkable.
Yeah.
And I
think the study from Shetty and others at Harvard and elsewhere was that a child born in the lowest quintile has a greater chance of getting into the middle class and into the upper middle class in Utah than in any other place in the country.
Yeah, and I think there's reason for that, and I'll give you a couple of examples that I like to think about. One, if you look at Shelley Gardner, who started Stamp 'em Up, you know, a scrapbook company that is now international. You know, she was a mother. She needed to augment her husband's income. You know, she was creative, and she started this business that just exploded. You know, we have people who go out on LDS missions. They come back. They've tasted, you know, and the international area, and they say, gosh, you know, here's what they did there. I can do it here in Utah, or I can start something in Utah that I can take overseas and do it there. So you have Utah's largest export, other than minerals, Darren Parker, who set up a company called Parker International, which exports beef around the world, and Utah's largest exporter. He went on a mission to Brazil. He made connections with the beef company there. He had connections with the beef company here in Utah, and now he sells beef all over the world. And it came from, you know, this idea that I can do something.
Yeah.
You know, and I think that's really the magic of our success here in Utah.
One of the things that's always said about Utah is it's one of the most entrepreneurial places in the country, and we are always on the top 10 list for that, in part because we have so many business startups, which is a key measure of entrepreneurship. We also have a lot of business failures.
Yep.
So maybe you could speak a little bit to the issue of how education plays in to the future success of Utah.
Yeah, well, I will give this example. You know, Pat Jones, and some of you may know Pat.
She's coming here to speak in that chair in a couple of weeks.
Well, good. Well, she chairs the Women's Leadership Institute in Utah. And she is developing a course to help women who may not have a degree and may not understand finance to know what they need to know to develop and grow a business. You know, and I think that when you see business failures, usually they grow too fast. You don't have the controls in place to manage the growth. You overextend, and then things collapse. At least that's my view, what I see. And so it's not that the idea is not good, but it's that you have to manage your growth and manage the business. And you have to hold back sometimes on growth for that management. Clayton Christensen, you know, the Harvard professor, just wrote a book called Competing Against Luck. And I tried to bring it today, but I couldn't find any copies. It's about a year old. Mm-hmm. But it's you may know Clayton Christensen. He's from Rose Park. He's considered as probably the most influential business consultant in the world. And
we do know Clayton. He's a good friend of mine, and he's the brother-in-law of the head of our Department of Management, Jim Davis.
Well, that's terrific. But you know, he developed this theory of disruptive technology. Yeah. But he came and was struggling with the issue that you just raised, Doug. Why are there so many failures? And this new book, Competing Against Luck, answers it. And basically what he said is that if you don't know what the client wants, if you don't know the real job that the client is trying to do, then you're competing against luck. And you can be lucky and make a success. You can be unlucky and have a failure. And he gives the story, which I think is a classical one. McDonald's hired him because they were baffled. On the East Coast, they had a lot of people in the suburbs coming into their stores early in the morning and buying a milkshake, and they wouldn't come back and they wouldn't buy anything more. And McDonald's had spent a fortune trying to get them to buy a breakfast sandwich or, you know, something else besides the milkshake. And so they finally came to Clayton and said, help us. And Clayton did the research, and he said, you know, McDonald's didn't understand the job that
of
the
the
people
milkshake.
coming in, that they didn't come in because they were hungry. Yeah. And so when McDonald's tried to force them or encourage them to buy more food to eat, that was the wrong job. They were coming in to buying that milkshake because they wanted something to keep them awake as they commuted from Connecticut to New York. And they tried a donut. It was too messy. They tried a banana. It was too messy. But a milkshake would last, you know, sort of that 45-minute commute. It was easy to drink, and it would keep you awake, and you'd get to New York, and you didn't feel full. And so he said, you know, if you put little bits of fruit in it, you know, you'd sell more because it would help do the job better. You know, they suck up the piece of fruit in the straw. It hits the back of their mouth, and they're, you know,
moment of euphoria.
Yeah, and they did that, and they, all of a sudden their business quadrupled. Yeah. You know, but it was all going back to understanding the job, and I think that's the message that I'm trying to get out to our entrepreneurs. If we understand, we can come up with a great idea, but if we can't package it with the idea of here's how it will help you do the job that you want, you're competing against luck.
Right. Wonderful place to pause now and open it up for questions from the audience. Let me just check. You know, we've got about 20 minutes. Who would like to ask the first question? We've got one right down here. Okay. Here's a microphone that's coming. If you'll please stand and state your name and tell us what your major is, we'd appreciate it.
My name's Brendan Henderson. I'm a theater major. So my question is, were there ever times that you felt like you were in over your head? And if so, what did you do to combat that?
Yeah, in fact, if you're a theater major, you'd enjoy this. I went back to Columbia, actually, because I wanted to go into the theater, and I had an uncle back there who was a producer on Broadway. And I got back there, and I thought because of the family connections, it'd help. And he said, he used almost those exact words. He said, "You're way over your head. I only hire professionals, and you don't have any talent." So you know, and when Tom Cook from Apple, you know, came out here last fall, he told me something that has really struck me as a true statement. He said, you know, a lot of times we get in over our head, and sometimes we fail, and sometimes we muddle through. But he said what's important is that you never give up, and you may have to reinvent yourself and reinvent yourself again. But if you hold true to the values that you have, and if you are well prepared, you will always be successful. And I think that's true. You know, if you try something, and again, I think this is good advice for businesses. It's a good advice for you know, the bank. If you try something and it doesn't work, you know, you have to be quick in closing it down and going on to something else, and reinventing yourself.
My name's Brian. I am a finance and accounting major. My question is, what is something about your current job or your career path that you've found to be a passion of yours? Whether it's obviously the career or the community involvement that you have with Zions Bank right now, or any other experience in your life. What has been a passion of yours related to your career?
Well, I would say this, and I think it's advice that I'd pass out to all of you. I love to come to work each day, and I'm passionate about it because I love the people that I work with. And when you think about it, you know, I'm probably working with my colleagues more than I'm with my wife, you know, and if you don't enjoy the people that you're working with, you know, it can be a miserable experience. And so I love to come to work. I love the people that I work with, and it's a great relationship.
Scott, just because you mentioned Jessilee and work in the same sentence, I have to ask you about your marriage day.
Yeah.
Can you tell the story about how you and Jessilee were married in the embassy in Tokyo and what was going on that day?
Yeah, I will. I was working in Japan, and Jessilee was working back in Washington, and she came over for us to get married. So we were by ourselves, and we were getting married at 3, and I worked till 2, and we came back, and in Japan, to get married, you go to a ward office, which is like a neighborhood police station, and at least when we did it, the man steps forward and he signs the book, and the wife stands behind and she doesn't sign anything, and so Jessilee tells me she never promised to support me or stay with me.
To honor and obey and all that.
And she wasn't sure that we were married because she wasn't asked anything, and so she wanted to go to the embassy and get the Japanese certificate notarized by the ambassador, so we did that.
Jessilee says that she was warned in advance about this. How big a role does hard work play in success?
Well, I think, you know, I think the key ingredients to success is, one, you have to be willing to put in the work. Mm-hmm. 2, I think you have to be creative in how you go about the work. But 3, you need to have a balance in your life. And I think when you think about balance, a lot of people try to put it in silos. You know, I have to spend this many hours at home and this many in the community and this many at work. But in my philosophy, I like to think of it sort of, you know, when you go to the circus and you see the jugglers, especially when they balance and spin plates on long poles, you know, and they have 4 plates going at the same time spinning. They know when they have to go back to each pole to give it a spin to keep the plates going. And if they don't get back in time, the plate will fall and break. And I think that's how you achieve balance. It's that you know where you have to be, when you have to be there to keep things going.
Well, you and Jess Lee do a lot of things together, and she in turn is also very involved in community affairs and also in higher education. She was the head of the Board of Trustees at the Salt Lake Community College, and now she's on the, is she still on the Board of Regents?
Yeah, she is.
So she's deeply involved in these community affairs as well.
Yeah.
So, another question?
My name's Andrew Kenny. I'm studying accounting and financial planning. I also bank with Zions Bank.
Oh, good.
So my question is, well, so there's, I think the video said there are 2,600 employees in Zions Bank, and obviously it's all over Utah and part of Idaho. So how do you demonstrate leadership and help guide all of those people without being able to talk to each individual person?
Yeah. Well, I think the key is one, you have good people that you work with, good managers throughout the organization like we have here, that you have good communication that goes out so that everyone hopefully is on the same page, they understand the values. That's why we've published these guiding principles that you all have, that sort of sets the tone, and that if you have a strong brand and a strong culture and good people, I think it allows you to operate well. Yeah.
Comment on that. Scott sends out a weekly email to us.
Can you pull a mic over, so we're taping this and we want to make sure your question gets picked up on the tape.
Sorry, Mike Wallace with Zions Bank. On that, Scott sends out a weekly email to all the employees, kind of giving us some guiding principles. The one this week, for instance, was on maintaining the branch appearance, and a story about some flowers dying in a branch and the customer wanting to take out his money because we weren't taking care of the small things. And so it's looking at all the small things and taking care of those things. So weekly we hear from Scott. He's a very involved president and a great person.
Yeah, thanks. Thank you. Other questions? Professor Fossen has a question. Professor Fossen, let me just tell you, Professor Fossen is a board member of a rival bank, Cache Valley Bank.
Well, that's a good bank.
It's not fair you set me up here. So I'm just wondering if you could talk to us a little bit about the competitive environment of banking in Utah. Oftentimes there's a lot of conflict between banks and credit unions. Yeah. How does Zions Bank kind of navigate that competitive environment and position yourselves in the market for success?
Well, there is a lot of competition here, and you know, Utah is an interesting place because we have the second most highly concentrated group of credit unions in the country. Alaska's the only state that has more, and yet we have a lot of banks. We have all of the major banks. We have a lot of regional banks. We have a lot of community banks, and you know, I think that really adds vibrancy to the community, but what it does is that competition, I think, is good. And it keeps all of us honest, it keeps all of us sharp, and it's great for the customer because, you know, they go to Mountain America, and then they come to us, and then they go to Cache Valley and say, I can get this there, and so if you look at things, our interest rates on deposits for the state is the highest in the western part of the United States because of that competition, which benefits the consumer. Our rates on loans are among the lowest. Again, that's due to this competition. And so I enjoy the competition, and I think we have really a great cadre of bankers and credit union people that are out there trying to provide access to capital, and that competition keeps us all sharp. And I think if you look at some of the products and services, even from small credit unions and small community banks, they are just as advanced from a technology point of view as that you can get from any international bank in New York, and it's because of the competition. But I should ask you that question.
I'm not an expert.
Yeah. Yeah. But Professor Fawcett is an expert on competition, though. So, you know, Scott, I wanted to ask you a little something about the, you know, the Great Recession, its impact on banking, and then the impact of the regulations that have come since. I don't know what the number I'm going to share was a number of banks and financial institutions before the Great Recession, something like 44,000. What is it now? It must be more concentrated than that.
It is. In fact, for the last 3 years, we are losing on average a bank a day. So, and that's that they're going out of business or they're being merged, but we're losing about 360 banks on average a day for the last 3 years. So it's coming down. Some of the national banks are shrinking in terms of branches, so the number of branches are coming down. But some of the community banks are expanding in terms of branches. So again, it goes back to this idea of how do you compete? And I think it makes our environment here in Utah really not only competitive, but vibrant, as I said.
Glass-Steagall was eliminated prior to the Great Recession. This was the law that prevented banks from being involved in investment banking. It's been very controversial. And I believe the McFadden Act was also removed, wasn't it? It prevents interstate banking. What do you see as the future?
But you know, unfortunately, and I was just back in Washington, both at the White House and on Capitol Hill on Wednesday, trying to encourage some financial reform coming out of the Great Recession with the Dodd-Frank and Durbin amendments. You know, banking has had, I think, their arms bound, and when I say banking, I include credit unions in this. You know, the Volcker rule has basically put back the Glass-Steagall Act. You know, so we can't invest in a fund that we don't control. Before that, we could invest in, and we did, in probably a dozen venture capital funds, which I think helps, you know, provide capital to startups. We can't do that now unless we control the fund. We can't trade on our own behalf. You know, again, the idea that that's risky and it puts your deposits at risk. You know, the competition between the retail industry and the banking industry under the Durbin Amendment, which capped the interchange that you could charge on a debit card transaction. And that interchange reduction, banks had used that, in my view, to provide free checking and cover fraud and so forth. And with that going out, you know, free checking has sort of gone away because we don't have that income coming in. And so banking is changing, a lot of it due to what happened during the Great Recession and the government's desire to ensure that if we go into another recession, no bank will be too big to fail, and that we won't have a collapse of the financial system or a near collapse that we did in that 2009, 2011 period.
How big a risk do you think we would repeat the 2008-9 period?
Well, you know, I don't think that we will relive that period. And you know, the reason why, and I'm biased, so I'll state that up front. But what really led the recession, I think, was what happened in the real estate market. And if you go back to the beginning, it wasn't because banks or credit unions were being too liberal in how they give credit. It went back to a statement and a policy of President Clinton that said, we want to increase home ownership from 61% to 68%. And the only way you do that is that he got Freddie and Fannie, the national association that bought home loans, to reduce their criteria And so you had people buying homes that didn't qualify. And during that period, they could justify it because the value of the home was going up so fast that they would sell it and they could make money, and then they'd have cash that they could go into a home. And I'll give you an example. We had an intern working for us. He was going to the University of Utah, and he decided he was going to buy a home. Now, he's an intern. He worked for 12 hours with us, and he was going to school full time. And he bought a home just below the University of Utah football stadium on 13th South.
Did he get a loan from you?
No, he didn't get a loan from us because we didn't participate in those programs. He paid zero down. He got 100% financing. He rented it out to 4 students, which gave him enough money to pay the rent. It worked so well that he went and bought a second home, put zero down, and you know, in those days, you could get a mortgage without giving any financial statements. It was, you know, you just stated what you made. There was no checking it. So he had 2 homes, you know, and each home was worth about $300,000, so $600,000 in debt. You know, he worked 15 hours a week from us, about $12 an hour, and he made the payments because he rented it out. Well, the recession came, property values dropped, the students moved out, and he was stuck. But he just walked away because he had nothing involved in it.
Declared bankruptcy.
And well, he didn't declare bankruptcy. He just gave the homes to
Back
the
to the
bank,
bank.
and walked away.
Yeah.
And you could do that. And if you saw, you know, if you've read books about the period, what happened is that people realized, Wall Street realized, that they could take these mortgages, they could cut them up and package them and sell them out as collateralized mortgage obligations. They were sold around the world because they were based and secured by real estate in the United States, and values were going up, and they thought, this is terrific, you know, and it was terrific until the market collapsed.
Yeah.
You know, in fact, I brought some books here, if I could just, and one of them has to deal with it. These are some of my favorite books. And this is Too Big to Fail. And some of you probably have read this, but there are a couple over here if you want to take it. But I think that what was good about this is that how you can just fool yourself in believing that things are okay when they're not. And when you read this story, especially when you read it about Lehman Brothers, you know, the CEO, Richard Fuld at the time, didn't believe that the company was having any problems. And you know, he quoted that. He said, what do you mean we may go into bankruptcy? And the next day he was bankrupt, and that really brought down the whole system.
Yeah.
You know, and so, you know, what I thought was interesting is just what happened, but also that you can fool yourself if you're not really looking at what's happening.
Tell us about the rest of the books.
Yeah, so this one, some of you may have read, but it's Larry Miller. He didn't write this book. His son Brian did, and it's Behind the Drive. Larry's book was Driven. And after Larry died, Larry worked so hard that a lot of his children, and Brian is one of the youngest, didn't know Larry. And so he decided he was going to write a book about his father, and so he wrote this. Now, this is a collection of stories that he got from people who knew his father, but he's put it into chapters based on Larry's business philosophy: generosity, faith, love, integrity, stewardship, loyalty, friendship, passion. And what's interesting about this is that when you read it, you get to know sort of who Larry really was, but you also know his business philosophy. And Larry was a true entrepreneur, and he really gave back to the community. So I think this is a terrific book. And Gail now, if you've read Fortune magazine, is a billionaire and the richest person in Utah.
And another great benefactor of this building.
Yeah, so that was a book. This other is an older book, but I really liked it. It's called When Giants Learn to Dance. And it gives sort of some short-term goals that entrepreneurs should take if they want to be successful.
Rosabeth Moth Cantor, a professor at Harvard Business School.
Yeah, and again, the idea is if you can teach elephants to dance, you can do anything.
Yeah.
You know, but it's really, if you like business, and for those business majors, I think it's really a terrific book. And then two others. This one is Second Sons, and one of the authors is actually a doctor at the Moran Eye Institute in Salt Lake. And he would go to Nepal and partner with an Indian doctor, and they would remove cataracts from the people in Nepal. If you remove your cataracts here in the US, it's a fairly simple operation, but it takes a couple of hours, and it costs several $1,000s. In Nepal, they developed a technique that they could do it in 6 minutes, and it costs $12.
Wow.
And he tells a story of how, you know, these people are basically blind because the cataracts are so heavy that they remove them, they can see, and when they can see, all of a sudden they become contributing members to the economy instead of being a drag on the economy. And I think it's a powerful story about how people are changing the world, but also how people can develop new procedures and really change the health of the population. So, you know, it's again Utah. If you read this book, I should also say Gary Crittenden lives in Utah now. He was CFO of Citicorp during this time. He's in the book. He was in all of these meetings.
Yeah.
And in fact, he tells that, you know, he was arguing with the government, the Treasury, that they shouldn't let Lehman fail. And Citi offered to buy him, and they said, no, it's time to let someone go.
Yeah.
And had they not let it fail, you know, we probably wouldn't have had the crisis we did.
Gary has been here and spoken to our finance club. A great leader.
Yeah.
What's is that the last one you've
Yeah,
read?
this last one is called The Human City, and this is a new book, and it's by Joel Calkin. And Joel is probably the foremost demographer in the country. And what makes he's from California. What makes him unique is not only does he have a real understanding of the numbers, how is the population changing, but he understands the implication that it makes for society. And
Demography is destiny.
yeah, it is. And what's interesting about this book, he looks at the development of our cities, and he's saying that, you know, the planners of the cities don't understand what's happening with the population, and they are building cities based on their planning rules that are going to destroy the cities and turn them all into ghettos. And his argument is that families want to live in the heart of the city, but they don't because they don't have housing for a family, and the schools aren't good. So they escape to the suburbs where they can get a house and they have better schools. And I think it's just, he talks about Utah in here, and that Utah sort of bucks the trend. But I think it's really interesting on how you can look at numbers, and one side says, well, it means this, and another side says it means this, and depending on which side you go, there's very different outcomes. But
This is super. Scott, thank you for bringing these books along with us. There are about 60 books over there, so I'd encourage you the students who would like to take one of these books to pick their favorite and leave some of them for others. Scott, we're at the end of the hour. I hate to draw this to a close because it's been such a fabulous session, but I want to just make an editorial comment to our students in the audience. You know, we say our pillars at the Huntsman School are entrepreneurial spirit, ethical leadership, global vision, and analytical rigor. And you couldn't have been taught by someone who exemplifies these things more effectively than Scott Anderson and the great career and service you're doing for our state. Thank you, Scott.
thank you.